Okay, dear students, this is Mustafa Mirchawala, your F6TX trainer. And today we are going to conduct the first revision day for F6TX, right? The objective is that we'll be doing a past paper, the latest past paper, so that you can understand what is coming in the latest past paper, right? And students, just think, if you can solve the latest past paper, if you can understand the latest past paper, then you can do everything, right? Plus, you all know that the pass rate of F6 recently is almost 53-54% global pass rate, right? So this indicates that it is easy to clear this paper. Yes, I agree that there are a lot of small things to learn in this paper. That's the challenge of this paper. But again, I would say that if you concentrate, if you keep revise, if you keep recall, if you do exam kit, then you can easily remember all those things. Okay, right? Now, for your motivation, I have pasted some recent positions. In this attempt, our institute got 13 position. Right now it's 12. It is written here because the last position just announced a day before. So these all are a position holder in just one attempt, and after these 12 or 13 position, now our total count is 166 nationwide and worldwide positions, right? Okay, so I hope you guys will also be part of these position holders in the upcoming attempt, right? And also I would like to share the recent scores, of F6TX. These are the recent scores, right? Okay, so a lot of students, you can see this is the list number one. In the list number one, students scored in 90s, 80s, 70s. So when these guys can do, you can also do. They also studied the same course, they also followed the same instruction, they tried to complete the course on time, they read examiner report is very important. They read the examiner articles, like CGT articles are very good, VAT articles are very good, advanced skills articles are also very good, right? So they just followed the instruction of their teacher and they got successful. You can see the screen and you can see the demographics, like there are students from Sri Lanka, India, Nepal, right, Azerbaijan, everything, all students are there, right? So before now without wasting any time, I'm gonna move to my first question. This is the latest past paper of December 23, and as you know, that examiner only discloses section C. Examiner only discloses section C. The remaining area is not disclosed by examiner. Okay, now in the chat group, in the chat box, we have sent you the WhatsApp group link. So those of you who are not part of our WhatsApp group, they can join our WhatsApp group, right? Okay, the group link is in the chat box. Now let's discuss the question first. What will be our approach? First, I'll be discussing, wait, okay, first I will be discussing the question here with pen, and then we'll be shifting to the excel side as well. Okay, so that you come to know how to solve it. Still, you know by now, right? So there are three questions comes in section C, and I'm not going to discuss corporation tax today because I feel many students have not covered corporation tax yet. So we'll be discussing the individuals area, the tax planning area. This is the first question. Normally 10 marks question is of tax planning, then the 15 marks question for individual tax, and then 15 marks for corporation tax. So today we are not going to do the corporation tax thing because there are some students, they have not covered corporation tax yet. But I would recommend you to try to complete your course by 12th of Feb or like 15th Feb max, so that last 15 days you can do revision or 20 days revision. Okay, that's a recommended approach. Now let's start, students. You should assume that today's date is 25th March 2022. Bertie is managing director. Managing director means employee and 100% shareholder of Revite Limited. That means Bertie is the owner of this company, is the shareholder, and as well as the director. So through director, you can withdraw salary. See, this is the company. and this Bertie is the 100% shareholder, 100% shareholder, and also the director. So now how can she takes out fund out how can he takes out fund from the company? There are two ways. Number one, he can be the director and take out salary remuneration. So in this way that salary will become employment income for this person Bertie, right? Okay, in this way he can take out funds. And the second option is he can take out dividends. He can take out dividends because he's also the ordinary shareholder of the company. He is also the ordinary shareholder of the company, so he can take out dividends as well, ordinary dividend as well. Okay, right? Now, my dear student, be very careful now. They will be comparing two packages. Okay. Now, as a lot of students in my audience, they speak Urdu Hindi language, so I'll say few lines in Urdu Hindi as well. Okay, तो अब आप लोग ये जहन में रखें, गौर से बात मेरी सुने कि ये इस कंपनी का ओनर भी है यानी शेयर होल्डर भी है और इस कंपनी का डायरेक्टर भी है, और ये दो पैकेजेस को हमें कंपेयर करना है. वी नीड टू कंपेयर टू पैकेजेस. ओके, सो द फर्स्ट पैकेज for the past few years, Bertie has taken high level of directors remuneration means salary from Rebite Limited to fund the personal pension contribution and the lease payment on his private car. However, Bertie has now realized that these are not the most tax beneficial arrangements and is therefore considering more beneficial alternate arrangements. Now, what he was doing in the past, he was taking salary from the company, and now once he takes out the salary, now he used to buy everything through his personal life, like car leasing as a personal expense, right? And investing in the personal pension account by himself. So if a person buys cars for his personal use, then it's not an allowed expense. If a person buys or lease a car for his personal use, then that is not an allowed expense from any P&L, right? Also, second thing, I hope you remember it now. Also, if a person contribute in his or her personal pension account, then that's not also not allowed expense. Personal pension contributions are not allowed expense. Yes, you get the relief on personal pension like band extension and ANI reduction. Okay, these are the relief, but personal pension contribution by any person in his or her own account is not an allowed expense at all, right? Okay, so previously the existing arrangement, he was just taking out salary from the company and he was paying through from his own pocket, right? Now read the existing arrangement. I would request you not to sleep, be active, look at the screen. This is all your practice. Bertie continues with the existing arrangements for the tax year 22-23. These are the existing arrangement. Rebite Limited will pay Bertie gross remuneration. This is the salary. Okay, salary will go in the non-saving income column. We know that. Bertie will use his private car. Now, first thing, you must know all the tax rules for this class. This is revision class. This is not a normal class. So you must have attended the classes and you must know the normal rules. This is the requirement for this class. Okay. Now Bertie will use his private car for business mileage with Rebite Limited paying a mileage allowance of 45 pence per mile for business journeys. Bertie will drive 10,000 miles in the performance of his duties for the Rebite Limited for the tax year 22-23. Excellent. Use your brain. Bertie is the employee. Employee is using his private car for the business of employer. Employee is using private car for the business of his employer. Okay, now there are two things. The first thing, as I taught in the class, it's my style. First thing, there is one thing which is called amount received. When you drive your personal car for the business of employer will pay you something. So employer paid you how much? Employer paid you, see this thing, 45 pence per mile. 45 pence per mile, 45 pence per mile. And now you know one thing. Whenever you use your private car for the business of employer, tax department allows you fixed mileage allowance, and you remember the rates of fixed mileage allowance. Luckily, the rates of fixed mileage allowance for first 10,000 miles, it's 45 pence per mile, and for 10,000 miles and above extra miles, it's 25 pence. So in this question, the miles are exactly 10,000. So mileage allowance is also 45 pence per mile. So if you use your brain, the net effect will be zero. If you use your brain, the net effect will be zero. Let me repeat in Hindi language. भाई गाड़ी चलाने के लिए भी मिले हैं 45 पेंस पर माइल 10,000 माइल्स के लिए, और पहले 10,000 माइल्स का माइलेज अलाउंस भी, पहले 10,000 माइल्स का माइलेज अलाउंस भी 45 पेंस ही होता है। तो अमाउंट रिसीव ऊपर लिख के माइलेज अलाउंस याद करो, हम लेस करते थे तो नेट इम्पैक्ट जीरो ही होगा। तो इस बार आप दोनों को एक एक बार लिख भी दो, लेकिन अल्टीमेटली नेट इम्पैक्ट जीरो होगा इन द टैक्स शीट। The net impact will be zero in the tax sheet. The net impact will be zero in the tax sheet. Okay. Now the last line. Bertie, that person will make personal pension contribution of 25,000 gross. 25,000 gross. Now hold, break. Now this is all about pension. Whenever there is a gross PPC, in the question, you have to compare it with relevant earning. Can anybody tell me what is the relevant earning? Hope you remember my classes. I used to say a word, mehnat ki kamai. Remember? So relevant earning in this question is only employment income, which is 75,000. So now this is gross PPC. And the other thing is 75,000 relevant earning. What is the lower amount? So lower amount is 25,000. So this is your TRC. And yes, we'll be doing band extension with this TRC, tax relief contribution. We will be doing band extension with this TRC. So your basic rate band here will be extended by, normal band is 37,700. So it will be extended by 25,000. Can anybody tell me what is the revised band? Can anybody tell me what is going to be the revised band? In the chat box, can anybody tell me? Yes, 62,700. Just keep this number in your mind. Okay. Now just use your brain. These three things related to Bertie personal tax, right? And now obviously Bertie is the shareholder of this company, so obviously company will also be paying some corporation tax. So see, they have given you ready-made. After taking account of the above, Rebite Limited corporation tax liability for the tax year ended 5th April 23 is 9611. Okay, they have given you ready-made corporation tax in the first case. So with the first case, you have ready-made given corporation tax, but yes, you have to calculate individual tax. देखो सुनो, आपको बात सुने, कंपनी का कॉर्पोरेशन टैक्स तो तैयार गिवन है केस नंबर 1 का, लेकिन इंसान का, ये जो बंदा है, इसका टैक्स आपने निकालना होगा। इंसान का टैक्स आपने निकालना होगा, 1 मिनट में निकल आएगा। सिर्फ एक सैलरी है, बाकी तो 0 0 हो गया है, माइलेज अलाउंस में 0 0 हो गया है। और you already know that personal pension contribution are not an allowed expense. So this is your existing treatment. Just take a 30 seconds silence to read it. Just take 30 seconds to read it and concentrate it. This is the existing package which is written in front of your screen. And yes, I have to calculate tax for this existing package as well. It is not difficult, I'm telling you. Now the next package, now see, they have proposed the new package. This is the new package in front of your screen. beneficial arrangement. This is the new arrangement. See, this is the new arrangement, which is beneficial arrangement. Okay. So they are saying if Bertie adopts the beneficial arrangement throughout the tax year 22-23, throughout the tax year 22-23, number one, instead of paying any director's remuneration, Rebite Limited will pay dividends. Now, this guy will take out dividend. No more salary. No more salary. No more salary. No more salary now. Now he will be withdrawing ordinary dividends. Okay. And you know, ordinary dividends are not an allowed expense for company. Ordinary dividends are never an allowed expense for company. But yes, it's a taxable income for this individual. It will go in the dividend column. It will go in the dividend column. Okay. Now, instead of Bertie running a private car, Rebite Limited will provide Bertie with a company car. There will be an electric car with a list price of 37,000 and zero CO2 emission per kilometer. Now, company is the employer. Yes, this is the past paper. Company is the employer, and this guy his employee. So employer is giving car to employee for private use. Employer is giving car to employee for private use. So yes, there will be a car benefit. Yes, there will be a car benefit. And you know the formula of car benefit. All of you, please listen. The formula for car benefit is cost of car multiplied by relevant percentage. Can anybody tell me what is the treatment of electric car with zero CO2 emission rate? You have done employment income. Electrical car with zero CO2 emission rate, what will be the percentage? Electrical car with zero CO2 emission rate, what will be the percentage for car benefit? Tell me. Yes, it's 2%. Very good. So in this question, only fixed 2% is the car benefit percentage. So if you guys want to calculate car benefit, it will be like this. Listen. Car benefit is equal to 37,000 multiplied by 2%. This is the car benefit. Okay. Don't worry. I'll be solving it this on Excel. Now, the next thing is the car will be leased by Rebite Limited at an annual cost of 12,000. Yes, it is an allowed expense now for companies doing business, and company has taken out this car on lease. Company has taken out this car on lease, and company is giving this car to employee. So yes, it's an allowed expense. This leasing cost and allowed expense for company. This leasing cost is an allowed expense for company, and there is no CO2 issue. There is no CO2 issue. Yes, if this car has a CO2 emission of more than 50, this car has a CO2 emission of more than 50 grams, then there will be some restriction on allowed expense. Remember, then there will be some restriction of allowed expense. You know, the 15% issue, the 15% punishment issue. You guys know this? When you are a businessman or you are a company and you are giving a car to your employee with a CO2 emission rate of more than 50 grams, then there is a punishment of 15%. Remember? But here there is no such punishment applies. Here in this question, there is no such punishment will apply. Why? Because the car has a CO2 emission rate of 0%. So this annual cost is full-time allowed for company. This annual cost will be full-time allowed for company, right? Okay. Now, because the car will be electric, there will no car fuel benefit. Once again, for the individual point of view, now switch your brain. For the individual point of view, for employment income, no car benefit in this question. Why? Because with electrical car, no fuel is needed. With electrical car, no fuel is needed. Next, number 3. Instead of Bertie personally making personal pension contribution, Rebite Limited, the employer, the ER, Rebite Limited is the employer, will make pension contribution of 25,000 in the company pension scheme on his behalf. Yes, this is allowed expense. Now, recall it. Whenever employer is contributing, in the pension account of employee, so that this is an allowed expense for employer. This is going to be an allowed expense for employer, and this is going to be exempt benefit for employee. अगर कभी मैं आई एम सेइंग दिस इन उर्दू, अगर कभी एम्प्लॉयर अपने एम्प्लॉय के पेंशन अकाउंट में कंट्रीब्यूट करता है, तो मालिक के लिए, एम्प्लॉयर के लिए ये एक अलाउड एक्सपेंस है, याद रखना, और एम्प्लॉय के लिए ये exempt benefit था. You studied this many times. Okay, so for employment income this will be an exempt benefit. for employment income, this will be an exempt benefit. Okay, now next thing is, before taking account of any deduction under the beneficial arrangement. Now they are talking about the second arrangement. Dividends, leasing cost, and pension contract. Rebite Limited will have a trading profit of 140,000 for the year ended. Now this is for the corporation tax. This is for the corporation tax. Now I have one question from you guys, your knowledge. See, this is your trading profit giving examiner has given you this trading profit before deducting these three things. Before deducting these three: ordinary dividends, leasing cost, and pension contribution. Now you tell me, out of these three things, which things are allowed expense from trading income? Out of these three things, which of the following are allowed expense for trading income purpose? Yes, correct answer. Correct answer. One student has given yes, 2 and 3. Only leasing cost is allowed expense, and pension contribution, if you are paying for employee, it's allowed expense, but ordinary dividends are never allowed expense. Ordinary dividends are never allowed expense, or not allowed expense at all. Ordinary dividends are not an allowed expense at all. Okay. Now the next thing, calculate a part. Calculate the reduction in Bertie's income tax. See the word, only income tax, and employee class 1 NIC, and employee class 1 NIC for the year ended 22-23 if the beneficial arrangements are implemented throughout the year rather than existing arrangements. Okay. Note, where relevant, you are expected to produce full income tax and employee class 1 NIC computation. Yes. So in this case, they are not asking about the corporation tax thing. Read it. Only income tax and class 1 employee NIC in the existing arrangement, and then income tax and class 1 employee NIC in the new arrangement. Okay. They are asking just for income tax and class 1 employee NIC, no corporation tax for this part. For requirement number A, there is no corporation tax. For requirement number A, my dear student, there is no corporation tax. So what you have to do, listen, you have to solve it for existing things. Existing, you have to compute tax and NIC, income tax and NIC for existing working, and then you have to compute income tax and NIC for new workings. That's it. No corporation tax in the first requirement. Okay. Now read the second requirement. Read the second requirement. Read this. Calculate the increase in rebate limited. Now they are asking about corporation tax for the year ended 5th April 2023 if the beneficial arrangements are implemented throughout the year rather than existing. See, you are not expected to recalculate the corporation tax liability under existing arrangement. See, because under existing arrangement they have given you ready-made. Under existing arrangement they have given you ready-made corporation tax liability. Let me scroll the screen, I'll show you. So you should assume that the tax rate of corporation unchanged. Okay. So you need to calculate only the new corporation tax liability under the beneficial arrangement. You need to calculate the new corporation tax liability under the beneficial arrangement, Okay. Right. Okay. So my first request, now I'll be moving. Let me show you the class 1 NIC rate. Hope you remember. Class 1 employee NIC, all of you, please take the picture. See, this is the first band 0 to 12570. The first band has 0%. So no need to show. Even the working is not needed for the first band because it's 0%. For the second band is 37,700 and the tax rate is 13.25%. And for third band, the tax rate is 3.25%. This is the excess thing. Okay. So you guys know the class 1 employee NIC. You guys know the working of class 1 employee NIC. Can anybody tell me class 1 employee NIC is calculated on dash which packet? Class 1 employee NIC is calculated on which packet? Tell me on the chat box. Class 1 employee NIC is calculated on which packet? Can anybody tell me? Yes, what the cash salary, bonus, and the mileage allowance received over. Remember? So, my dear students, in this question, there is salary only. There is no bonus. There is only salary of 75,000. There is no bonus, and the mileage allowance received is exactly 45 pence. So there is no payments for car more than 45 pence. So it will not be included for class 1 employee NIC. So for class 1 employee NIC, only salary is relevant. Only salary of 75,000 is relevant as in the existing arrangement. That's it. Now, one more question. In the existing arrangement, yes, there is a salary. In the existing arrangement involved, please, there is a salary. Is there any salary in the new arrangement? Is there any salary in the new arrangement? No. Beneficial arrangement, there is no salary, only dividends, only dividends. So common sense, apply common sense. In the new arrangement, you are not required to calculate. In the new arrangement, you are not required to calculate NIC. There is no class 1 employee NIC in the under the beneficial arrangement. Only in the existing arrangement you need to calculate class 1 employee NIC. And see, I have shown you the rates. Even you know this. Even you guys know the rates. So now my last request, as I'm going to move the screen, you guys can take the picture. If you want to take the picture, you can, please. If you want to take the picture, you may, please, of the question. If you guys want to take the picture of the question, you may, because now I'm going to move the screen. I'm going to shift myself to Excel. And these are the requirements. If you want to take the picture, we are doing the latest past paper, students. Somebody is asking, it's the latest past paper of September, December 23 attempt. Okay, take the picture now. Now I'm going to move towards okay. So, okay. So now we are going to move towards the Excel area. So the first good news is, see, just to save your time, I hope you all have the question with you. You have taken the picture, okay? So now, just to save the time period, I have already written these directors remuneration, these side headings and all, just to save our time period. And it's not my objective to teach you how to type these words. That's not my objective, okay? So before wasting any time, as we have already discussed the question, now we just have to solve it. And my audience are you guys, those who have already studied the tax. You guys are on revision days, okay? So in the first requirement, you need to calculate income tax. Listen to me, income tax and class 1 employee NIC. You need to calculate income tax and class 1 employee NIC, okay? So let's do it with existing arrangement. In existing arrangement, let me enlarge it, okay? In existing arrangement, your director remuneration was 75,000, right? Okay. Now mileage allowance was 00, right? Because 45 pence was received from employer, and exactly for first 10,000 miles, 45 pence is allowed expense. So it will be 0. Okay. Now, you know, as there is no other income, this 75,000 will be your total income. As there is no other income, this 75,000 will be your total income. Please play smart. As there is no other income, this 75,000 will be your total income. Okay. Now, so this total income, and there is no qualifying interest paid. So this will be your net income. This net income will go on the side working for, remember, side working. And from net income, you less gross PPC. Yes, there is a gross PPC of 25,000. So 75,000 less 25,000 will give you like 50,000. So your ANI adjusted net income is 50,000. Now you tell me, whenever your ANI is less than 100,000, your personal allowance is 12570. Remember, your personal allowance will be 12570. 12570. Okay. So can anybody tell me what is the taxable income? What is the taxable income? The taxable income will be 62430. 62430. 62430. Now tell me, do you guys remember the revised band? No need to show even the revised band. Remember the revised band. 37,700 plus we extend the band. We extend the band because of gross PPC. We all extended the band because of gross PPC. So it will be, remember, it will be 65. Listen to me. 37,700 plus 25,000. 37,700 plus 25,000. It was, I think, 62,700. 62,700. So the capacity of your first band is 62,700. And what's your taxable income? See, what's your taxable income? It's just 62430. I repeat, the capacity of your first band, now after stretching the bands is 62,700, and your taxable income is just 62430. So everything will come in the first band. Okay, so it will be 62430. Let me show 62430 multiply by 20%. 20%. This is the presentation. Now do it here. Equal 62430 into 0.2. So 12486 is your existing tax. 12486 is going to be your existing arrangement income tax liability. Okay, income tax liability. Now let's calculate class 1 employee NIC. Let's calculate class 1 employee NIC. Class 1 employee NIC. Now use your, even you can do it yourself. In this question, class 1 employee NIC will be calculated. Class 1 employee NIC will be calculated. Class 1 employee NIC will be calculated on, tell me, on 75,000 amount. So out of 75,000, just think about the bands. You have, you know the rates. Out of 75,000, the first 12570 is 0%. First 12570 is 0%. Okay. So now let's calculate the second band. Do you remember the second band? Let me write it here. The second band will be, it will be 50270 minus 12570, which is equal to 37,700. 37,700, sorry, 37,700. Now multiply by this rate, So you can do equal 37,700 into 0.1325. 37,700 into 0.1325. This is your first answer. Now what about the excess? Now you have calculated class 1 employee NIC till 50270. Till 50270. Now just calculate the excess class 1 employee NIC. So the total salary was 75,000. So it will be, wait, it will be bracket open, 75,000 minus 50270. 75,000 into 3.25%. Let's do it here. Equal bracket open 50270, sorry, 75,000 less 50270 bracket close, multiply by 0.0325. Okay, so 804. So what how much is the total? 5799. Yes, it's 5799 is class 1 employee NIC. Okay, 5799 is your class 1 employee NIC. So two things we have calculated. Number one is income tax and number two is class 1 employee NIC under existing arrangement. I repeat in Urdu, हमने दो चीजें निकाल ली हैं. एक इनकम टैक्स निकाल लिया है, यूजिंग एग्जिस्टिंग अरेंजमेंट और एक क्लास 1 एम्प्लॉय एनआईसी निकाल लिया यूजिंग एग्जिस्टिंग अरेंजमेंट। मेरे प्यारे बच्चों, अब आप लोगों को ये चीज आनी चाहिए भाई, आप लोग बुढ़े हो गए हो पढ़ पढ़ के। ये सब पढ़ लिया है तुम लोगों ने, इनकम टैक्स निकालना, क्लास 1 एम्प्लॉय एनआईसी निकालना। दिस इज जस्ट नंबर क्रंचिंग। वेट अ मिनट। ओके, so now this was the existing arrangement. Did you understand the existing arrangement? If yes, then please write on the chat box. Now we'll be moving towards, my respected student, the new arrangement, the beneficial arrangement, right? In beneficial arrangement, there will be two column, non-saving, and the second is dividend. Let me show you. Non-saving and the second is dividend income. I hope you can see. So first thing is car benefit. Car benefit, remember the car? Car benefit will be 37,000 multiply by 2%. Multiply by 2%. Okay. So you can equal 37,000 into 0.02. Okay. So it's 740. Then pension contribution. Now employer is doing pension contribution for employees. So for employee, it's exempt benefit. For employee is exempt benefit. Wherever employer does pension contribution for employee, it's an exempt benefit for employee. So write 0. Now, how much was the dividend? Dividend income was, I think, dividend was 35,000. Yes. Dividend income was 35,000. Dividend income was 35,000, right? Okay. Now let's deduct the personal allowance. Now tell me, now just simple go. Hope you remember when I was teaching you these basic topics, I taught you personal allowance is always deducted from non-saving income first. Personal allowance is always deducted from non-saving income first, okay? And then dividend. Can you tell me how much is the non-saving income in this question? It's 740. So first of all, deduct 740 from here, and then out of 12570, use your calculator. 12570 minus 12570 minus 740. Do it. 12570 minus 740. This will be 11830. Okay. So that means the non-saving income is all wiped out. The non-saving income is wiped out. You can see it's simple 0. And the dividend income, wait, how much is the dividend income now? It's it's 23170. Your dividend income is 23170. Now, student, look at the screen. You have no non-saving income in this question. Just enjoy it. Yeah, it's basics. You have no non-saving income, so you will be directly starting computing tax on dividends. Now, whenever you start computing tax on dividend, always first 2,000 into 0%. Always there is a NRB of dividend is 2,000 multiply by 0. Remember? And out of 23170, you have calculated tax on 2000. So now 21170 is left. And we are in this question, we are in the first band. In this question, we are in the first band. So the first band tax rate is 8.75%. Okay, let's do it. So first of all, it will be 0. 2000 multiplied by 0% is 0. And then 21170. This will be 21170 multiply by 8.75. That will be 0.0875. 1852. 1852 is your income tax now. 1852 is your income tax now. 1852 is your income tax liability. Okay. Let me copy it and write it here. Okay. Wait, sorry. Okay. So in this case, your income tax liability is 1852. Now, students, listen. Do you think we should calculate any class 1 employee NIC in the beneficial arrangement? No. In the beneficial arrangement, no need to calculate. Even you are not required to calculate class 1 employee NIC. So there is only one income tax, nothing, only this one income tax. So let's compare the numbers. Definitely this is beneficial. Definitely this is beneficial. Listen, in the existing arrangement, you were paying income tax of 12486. In the existing arrangement, you were paying income tax of 12486. And you were paying class 1 employee NIC of 5799. So add these two. Come on, add these two. So 12486 plus 5799 is something like 18,000 something, 18,000 pounds something. But now it's just 1852, only 1852. So big benefit, big tax benefit you enjoyed as an individual. Big tax benefit you enjoyed as an individual. Big tax benefit you enjoyed as an individual, right? Okay, so we have to write this, the reduction in Betty's income tax and class 1 employee NIC. Let me write it. Wait. Open the brackets. The existing amount was 12486 plus 5799 for class 1 employee NIC, and now the new amount is 1852. So 1852, sorry. So how much benefit you got? Is use your calculator. It's 16433. 16433. So this is the end of requirement number A. This is the end of requirement number A. Your requirement number A is done. Your requirement number A is done by shifting to the beneficial arrangement. By shifting to beneficial arrangement, finally we got the tax benefit of 16433. Finally, we got the tax benefit of 16433. We got the tax benefit of 16433. Okay. Did you understand? Please write on the chat box. If you got it, write on the chat box. Now the last requirement is about corporation tax. Last requirement is about corporation tax comparison. Last requirement is about corporation tax comparison. See, corporation tax comparison is, listen, you have a trading profit. Listen to me. You have a trading profit. First of all, existing corporation tax was given in the question. So there is no question to calculate existing corporation tax again. You are not required. We know that. I will tell you the number. Yes, you need to calculate the new corporation tax. So new trading profit was 140,000. New trading profit was 140,000 before deducting three things. Before deduction of three things. Number one, first is your leasing cost. First is ordinary dividend. So, you know, for companies, ordinary dividends are not an allowed expense at all. Ordinary dividends are not an allowed expense at all. Okay. So we will not deduct. But yes, if you have bought car on lease for your employee, it's an allowed expense. So this will be, it's how much? It's 12,000. Leasing cost will be 12,000. So we'll deduct it. And then we have pension contribution. Yes, if employer is contributing in the pension account of employee, if employer is contributing in the pension account of employee, it's an allowed expense. So this will be 25,000. Okay. So now how much will be the final total taxable profits? It's 103,000. And as we all know, for corporation tax, there is a flat tax rate. This is the best enjoyment in corporation tax. There is a flat tax rate of 19%. So the tax rate is 19%. So this will be this number multiply by 0.19. Okay. So 19570. Now you can check what was the existing corporation tax liability. Can anybody tell me? existing corporation tax liability was 9611. Go and check the picture. You guys took the picture. The existing corporation tax liability was 9611. So the examiner is asking the increase. Let me tell you the increase. The increase will be bracket open. 19570 is the new one, minus 9611. Tell me the amount. 19570 minus 9611 will be 9959. This is your answer. This is your answer. See, let me bold it again so that you can see. See, this is the answer. The increase in rebate limited corporation tax liability. The increase in rebate limited corporation tax liability. Okay. Now, one reality-based thing. Now I'm going to give you a reality check. Normally, this is a tax planning question. These questions are normally harder for students. Normally, I'm giving you the feedback. In your kit, you will find these questions a little bit difficult because these questions are the function of brain, and these questions are the real life question when you will be doing tax planning, when you will be doing tax consulting. If you go in the tax field, this is your real work. This is your real work. In this way, you will give benefit to your client. You need to give benefit to your client. In that way, the client will give you good fees. So this question has been ended now. If you want to just walk through it, see, this is the first part. This is the first starting area. Students, please check it out. Don't worry about it. I'll send you the file. I'll send you this Excel file. Okay. Yes, it is better when student has asked the question. It is better we show the working on in the brackets. It's better. It's better. If you have time, you should show. This comes in the good presentation. So now we are moving again. We are moving again on. Now the question will be easier. Now the next question will be simple. It's not tax planning question. It's an easier question now. This question is the question number 2 of that past paper, my dear students, and this is very simple. It's basic employment income question. It's employment income question. Now I need more active response from you guys. Okay, see, your first objective is to clear the paper. The first objective is to clear the paper, right? Okay, don't waste your exam fees. The first objective is this. Now SME is employed by HHK PLC. The following information is available for the tax year 22-23. HHK PLC paid ESMA a gross annual salary of 45,000. Now this is here it is written employment. So for SME, you need to prepare the PNL of employment income PNL. So yes, salary is a taxable income. It will go in the employment income PNL. Yes. Now next thing is bonus. Hope you remember the rules for bonus. Let me tell you the very super headline. For bonus, always check two dates. Always check two dates in bonus. The first is entitlement date and the second is payment date. Entitlement date and payment date. Just check two dates and then go for the earliest date. Check whether the earliest date lies in which fiscal year. I repeat in Urdu. अर्लीस्ट डेट जिस फिस्कल ईयर में लाई कर रही होगी उसी फिस्कल ईयर में उस बोनस पे टैक्स पे करना है, उसी फिस्कल ईयर में उस बोनस को इंक्लूड करना है. ओके, सो माय डियर स्टूडेंट, यू नीड टू चेक द अर्लीस्ट डेट इन द बोनस. ओके, नाउ यू गाइस आर बेटर देन मी इन दिस केस. कम ऑन, स्टार्ट. ड्यूरिंग द टैक्स ईयर 22-23 SME received a bonus of 19,000 on 10th April 2022, right? Apparently this bonus is received in our fiscal year, but now let's see. And another bonus on 20, okay, both bonuses are received in our fiscal year, but now let's see the entitlement date. SME was contractually entitled to receive these bonuses on 31st March 22 and 31st March 23. So that means for the first bonus, the entitlement date falls in the last fiscal year. For the first bonus, that is 19,000. For the first bonus, that is 19,000. Entitlement date falls in the last fiscal year, that is 21-22. So this first bonus will be taxed, was taxed in last fiscal year. We'll only include this second bonus. We'll only include this second bonus in our sheet. Very simple. Very simple. Right, my respected students? So only second bonus to be included, only second bonus to be included. For first bonus, we'll write 0 in our sheet. Now catchy part, easy part. During the period, listen, during the period 6th April to 30th November, can you please count? It's almost 9 months. 6th April means the April months we'll include. So April, May, June, July, August, September, October, and November. 8 months. 8 months. The car is provided for 8 months. The car is provided for how many months? 8 months. Okay. Yes. It's a petrol car. It's a petrol car. So let's calculate the car benefit. Very good. Very good. One student has calculated. The car has a list price of 42,000 and CO2 emission rate of 178 grams. You guys are champion. 178 means 178 should be rounded off to 175. Okay. And then you deduct 55. The excess is, I think, how much? 120 is the excess. For petrol car, 55, the base rate is 16%. 120 divided by 5 is how much? 24. So 16 plus 24 is 40%. Now you tell me, 40%, is it acceptable to use 40%? Is it acceptable to use 40%? No. Whenever it's 40%, just cap it to 37%. Just cap it to 37%. So in this question, we'll be using 37% rate. Okay. So as the car is only provided, for 8 months, so what you will be doing? Listen, 42,000 multiplied by 37% into 8 upon 12. 42,000 multiplied by 37% into 8 upon 12. Yes, correct. Next, there is no, see, SME was not provided with any fuel, so no fuel benefit. Enjoy. Now, on 1st December 2022, SME purchased her own car. Now, mileage allowance thing for 20,000. During the period 1st December 2022 to 5th April 20, SME drove a total 23,000 miles, of which 12,000 were for business journeys. HK PLC reimbursed 5760 for the business journeys. Okay, now the case is employee is using his own car, her own car for the business of employer, So now there are two things. Once again, two things. Number one, amount received. The employer is paying something. Yes, this amount received is 5760. This amount received is 5760, which is full-time taxable. And the second thing, there is an allowed expense which is called mileage allowance. There is an allowed expense which is called mileage allowance. And you know the rates of mileage allowance. For first 10,000 miles, the rate is, the rate is, you know, how much? 45 pence. And the remaining excess 2,000 miles, it's 0.25. So can anybody tell me the net amount? It's easy. Let me tell you. It's like this. Listen. Amount, wait. It will be amount received I'm just doing rough working here. 5760. And then mileage allowance will be for first 10,000 miles, it will be 0.45, which is 4,500. Okay. And for next 2,000 miles, it will be 0.25, which is 500. So 760 is the taxable amount. 760 positive is the taxable amount. 760 will be added in your sheet. 760 will be added in your sheet. This is free marks. You have to score these marks. No option. Okay. This is free marks. Now next thing. SME means employee. Employee contribute 4% of her gross annual salary of 45,000 into occupational pension scheme. Yes, employee employee contribution in occupational pension scheme. Employee contribution in occupational pension scheme is an allowed expense. Employee contribution in occupational pension scheme is an allowed expense. So what you will do, 45,000 multiplied by 4%, it's an allowed expense from employment income PNL. Now, employer is also doing something. See, HHK PLC means employer contributed further 2% in the pension scheme. This is exempt benefit. This is exempt benefit. Just write 0 for this. This is exempt benefit. Just write 0 for this. Okay. The first one, the first contribution was allowed expense from employment income PNL, and the second one is exempt benefit. Just do nothing. Okay. Now, next thing. So finally, this was all your employment income. This was all your employment income in this question. I would say these were scoring marks. These were scoring marks. These employment income was scoring area. Okay. Now the next thing. Next thing is other information. During the tax year 22-23, SME received dividend income of 6,000. Okay. So this dividend income will go in the dividend column. You know, there are columns. Non-saving is a separate column. Then dividend income will go in the dividend column. This is a separate planning area. SME is considering transferring these shares to her husband ND. Yes, there is a possibility if you transfer your shares to your husband, then this income will automatically be transferred to future, and future dividends will also be transferred to the husband. And in this way, you can use the husband's basic tax rate, the husband's nil rate band, and lot of things. Okay. So this line is linked to a separate requirement. This line, note number 1, last part is linked to a separate requirement, which we will be doing shortly. Okay. Yes, marriage benefits. Very good. Very good. Excellent. Good memory. Marriage, nikah ke fayde. I told in the class, nikah ke fayde, right? Now, during the tax year, during the tax year 22-23, SME made a charitable donation of 5,000 net under the gift aid scheme. Yes, charitable donation under the gift aid donation. Remember? So first thing you need to do grossing up. So 5,000 divided by 80 into 100. If you do 5,000 divided by 80 into 100 is 6250. This is your gross gift aid. This is your gross gift aid. Okay. With this 6250, you need to stretch the band. You need to stretch the band. It's 6350. Sorry. 5,000 divided by 80 to 100 6250. Yes. So with this 6250, you will be doing ANI reduction. You will be doing ANI reduction, which is not normally needed nowadays. You don't need to show that working. Okay. And the second thing is with 6250, you will be stretching the band. You will be stretching the band. You will be stretching the band. Can you tell me what's your normal band? Your normal band is 37,700 plus 6250. Can anybody tell me what is the revised band? So it will be easier for you guys. 37,700 plus 6250. Just keep this thing in mind. 43950 is your revised band. 43950 is your first band after revision. First band after revision. There is a question. ANI reduction working is not needed. Yes, it is not needed. Listen, when there is no reduction working, you know, if your ANI is coming between 1 lakh and 125,140, then it's okay, you show it. Otherwise, when you have to use the fixed personal allowance of 12570, then normally in the latest past paper they have removed it. Okay. Now last thing. Now Esme's is married to Andy. Andy's only income in the tax year 22-23, only dividend income of 7,000. Now just think, no other income. That means he has some unused personal allowance. He has, for any individual, the personal allowance in any fiscal year is 12570. For any individual, the personal allowance is 12570. But this guy has income of only 7,000. So there is unused personal allowance. Unused personal allowance. And I hope you remember there was a topic taught by me in the class. Transfer of unused personal allowance. Transfer of unused personal allowance with conditions. Transfer of unused personal allowance with conditions. Okay. Now, both SME and Andy's income is expected to remain same for the foreseeable future. Okay. Now, yes, very good. There are some requirements which students is writing in the chat box. They are perfect. They are active, guys. Thank you. So, calculate SME's income tax liability for the tax year 22-23, 10 marks. This is free marks. I would say free marks. Enjoy. Free marks. Enjoy. Enjoy. This is free marks. Just simply calculate SME's employment income and then calculate tax for SME. Just simply, this is just eat it up. Eat it up. That means out of 50, you got 10 marks. Out of 50, now you just have to score 40 marks to clear the paper. So there are some free marks in the question. Always, this is normal. Now B requirement is very easy. B requirement is very easy. I will write it's theoretical requirement. Explain how a married couple can reduce their income tax liabilities. Explain how a married couple can reduce their income tax liabilities for the tax year 2023, 22-23 by claiming the transferable amount of personal allowance. Yes, the whole story you need to tell. They are asking how. So you need to write the conditions and everything, the working, and state why such claim is not possible for us. Thank you, examiner. We should say thank you to examiner. Examiner has written in this question that this is not possible. In this question, the transfer of personal allowance is not possible because of one condition. Because of one condition. You know the conditions. To transfer the personal allowance from husband to wife or wife to husband, there is one very special condition. Both husband and wife must be basic rate taxpayer. Both husband and wife must be basic rate taxpayer. So in this question, the husband is basic rate taxpayer, yes, but the wife is not basic rate taxpayer. Wife is a rich lady. Wife is a rich lady and husband is a nikamma. Okay. Wife is a rich lady. Wife is higher rate taxpayer and husband just waste time at home. So in this requirement, this three marks is, again, I would say, free marks for active people. You just have to, you remember my lecture, you have to copy paste my lecture. In this requirement, remember when I taught you with points. You have to copy paste those points, and then in the end you have to conclude that this transfer of personal allowance in this question is not possible. Why it is not possible? Because both of them are not basic rate taxpayer. SME is higher rate taxpayer. Yes, ND is basic rate taxpayer. Okay. Okay, now the last requirement. Explain how. Both SME's income tax liabilities and ND's income tax liability. Right now, it's not the namaz time. It's time like it's 30-40 minutes are left. And if somebody wants a break, so he can simply take the break, because I'm recording this class as well. So I'll send you the recording after the class. Okay, don't worry. I'll send you the recording. It's available for all of you. Now, dear students, explain how both SME's income tax liability and ND's income tax liability for the tax year 23-24, they are asking about the next fiscal year, would be affected if they were to transfer all of the quoted shares currently held by SME to ND. Now, if SME transfers, listen, if SME transfer the shares to ND, what will be the impact? What will be the tax saving? What will be the impact and what will be the tax saving? Can anybody tell me? See what will happen. ND already has a dividend income of 7,000. ND already has a dividend income of 7,000. Just it's the requirement of what we say oral requirement. Now, how much was the dividends for? Can you tell me? SME dividends were 6,000. SME dividends were how much? They were 6,000. See, this is the number. This is the number. Can you see? SME dividends were 6,000. So if SME transfers 6,000 dividend to husband, sorry, what will happen? Husband's already dividend income was 7,000. Husband's already dividend income was 7,000 plus 6,000 from wife. So 6 plus 7 will be 13. 6 plus 7 will be 13, right? I repeat, हस्बैंड के पास ऑलरेडी 7,000 का डिविडेंड तो था ना, अब उसकी वाइफ की तरफ से 6,000 का डिविडेंड और आ जाएगा. सो इट विल बी 13,000. इट विल बी 13,000 टोटल डिविडेंड. नाउ फ्रॉम दिस 13,000, फर्स्ट हस्बैंड विल डिडक्ट 12,570 personal allowance of 12,570. So this will be 430. This will be 430 taxable income. This will be 430 taxable income. Okay. And now on this taxable income, as this taxable income is a dividend income, so if you start calculating tax on dividend income, so there is an NRB of 2,000. So this 430 will simply be multiplied by 0%. So no tax, zero tax, zero tax, zero tax, zero tax on this transaction. The first thing is, if this lady transfers 6,000 dividends to husband, then finally no extra tax to be paid. Zero tax, zero tax. Now what we have to do, we have to calculate the existing tax. We have to calculate the existing tax on these dividend, on these 6,000 dividends, when these dividends were with SME. When these dividends were with SME, so calculate that existing dividend and then calculate this zero. This is zero. After transfer, the tax is zero. So the difference will be your tax saving. The difference will be your tax saving. मैं फिर बोलता हूँ, अगर यही शेयर एसमी के पास थे तो इसका टैक्स क्या बन रहा था, वो एक तरफ निकाल लो. हाँ, और अब जो ट्रांसफर होने के बाद तो जीरो बन रहा है, ना, तो जितना डिफरेंस होगा वही एग्जैक्टली टैक्स सेविंग होगी, वही एग्जैक्टली टैक्स सेविंग होगी फॉर माय उर्दू गाइस. Okay, so please read this requirement again. Read this requirement again. You are not required to calculate. I'll do it. Don't worry. Don't worry. Okay. So now what we are doing, just relax. First step is relaxation. The first thing is you need to take the picture of this, wait. You need to take the picture of this so that you have the You have this question with you. Take the picture if you want. Take the picture if you want. Because now I will be moving to the Excel thing and you guys won't be able to see this thing, okay? Now, once again, take the picture. Once again, take the picture of this requirement number A and B. Requirement number A and B. Okay, and then requirement number C. Then requirement number C. Okay, so now just this was the last question. Just be active. We are going to solve it. So, my dear students, we have now we have shifted ourselves to the screen. So now let's start doing this question. First of all, we have to calculate requirement number A is very simple. What is the requirement number? Is simply calculate tax for SME for 22-23 fiscal year. So if you want to calculate tax first, so you need to calculate income as well. You need to calculate income as well. Okay. So how much is the salary? The salary is 45,000. Please. I hope you can see the screen. The salary is 45,000 now. Then next thing is, please don't write on the screen because this will disturb. Please, students, don't write on the screen. Kindly listen. Now, the pension contribution, my respected student, employee contribution in occupational pension scheme is allowed expense, right? So SME did 45,000 into 4%. SME did 45,000 multiplied by 4%. Okay, 4%. Okay, so this will be equal minus 45,000.04. It's 1800. Okay, then we have yes, the contribution by employer. The contribution by employer is an exempt benefit. Employer contribution is an exempt benefit, right? 0. Now there were two bonus one was exempt. Bonus one was exempt because bonus one was received related related to related to last fiscal year, that is 21-22. Okay, 21-22 fiscal year. Now bonus 2 is how much? Bonus 2 is, I think, bonus 2 is 22,000. Yes, bonus 2 is full-time taxable. Bonus 2, my dear student, is full-time taxable. Let's add it now. Car benefit 1. Car benefit 1. It will be, what was the cost of car? The cost of car was, it was 42,000. 42,000 multiply by 37%, multiply by 37% into 8 upon 12. This was the total, this was the real working. Okay, now how to calculate this percentage? Listen, hope you remember the basic percentage was 16%, 16%, 16%, plus brackets open 175 minus 55 divided by 5. So this will be 16 plus 24, 16 plus 24. So the total came out to be 40%. Total came out to be 40%. Now you tell me, 40%, is it acceptable? 40% is acceptable? No. So it should be restricted. It should be restricted to 37%. Okay, right? Now let's calculate this. Equal 42,000 into 0.37 into 8 upon 12. 10360. Now try to understand this. Listen, there are some working which you can do in the brackets, which you can do. There is no need to do separate working. You can do in this line as well. This is also acceptable. Okay. Now then the mileage allowance working. Let me do mileage allowance working for you. Wait. Let me give heading. Even I taught you on with pen mileage allowance working. So the first thing is amount received. Amount received was I think 5760. Amount received was 5760. Amount received was 5760. Now less mileage allowance. Okay. So this was 10,000 multiplied by 0.45 and then 2000 multiplied by 0.25. So this will be minus 4500 and this will be minus 500. So if you see the net impact, if you want to see the net impact, it will be this 760. 760 is the net amount, net taxable amount. Okay, so this is the mileage allowance working. This is the mileage allowance working. Okay, I hope you remember because I did, even you guys did this for me. You guys did this for me, right? So it's 760 the net amount. Now this is the cell number 59B, 59B. Okay, so it's going to be 760. So can you tell me what is the total employment income now? What is going to be the total employment? Wait. Yes, let's calculate the total employment income now. 76320. Now, how much is the dividend income? How much is the dividend income? Can anybody tell me? Dividend received by this lady was 6,000. Yes, 6,000. So let's total it. Let's total it. This is your employment income. And this is your, wait. Oh, wait. And this is your, sorry. Okay, this is dividend income. There is one more column I have written here, total, no need to make it. In the exam, no need to make this total income column. In the exam, you are not required to make this total income column at all. In the exam, you are not required to make this total income column at all. Okay, so finally, just use your brain, just use your little brain. If you add these two, 76 and 6 is 82. 76 and 6 is 82. Okay. So 82,000, definitely when your net income is 82, so your ANI will be less than 82,000. When your net income is 82,000, so definitely your ANI will be less than 82,000. Correct. So in this case, you will have a fixed personal allowance of 12570. You will have a fixed personal allowance of 12570. Correct. So let's calculate the taxable income. 63750, and then the dividend will come as it is. Okay, so finally we need to calculate tax on these two things, non-saving and dividend. 63750. Can anybody tell me, can anybody active guy can tell me what was your first band? Your first band capacity, let me write here in this question. Your first band capacity is increased to, remember, 37,700 plus 6250. I think it was 43950. Somebody told me 43950. Your first band is 43950. Am I correct? First band is 43950. Yes, yes, yes. Perfect, perfect, perfect. Now it will be easy for me. So let's start calculating tax here. So first of all, what we'll do, we'll calculate here 43950. Sorry, your non-saving taxable income is 63750. You'll pick this non-saving income and you'll knock the first band. So the capacity of first band is 43. The capacity of first band is 43950. 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 So definitely you will consume complete first band. It will be 43950 multiply by 0.2. Okay, let me do it here in the total column. Equal 43950 multiply by 0.2. First answer. Then out of 63750, out of 63750, sorry, we have calculated tax on 43950. Now this excess, on this excess you will do 40%. Remember? So this will be I think, wait, equal bracket open 63750 less 43950 bracket close multiply by 0.4. 7920. Yes, it's perfect. Okay, now the next thing is now let's come to dividend income. And don't forget our first band is consumed. Basic rate band is consumed. So 6,000 is the dividend income and we are in the second band. So for dividend income, always first NRB. NRB is 2000 multiplied by 0, and then the next 4,000 will come in the second band of dividend. First band is exhausted, finished, kha liya gaya hai. So it is 33.75%. Okay, so can you tell me what is the tax on dividend? This will be equal 4,000 into 0.3375, 1350. Now what will be the total income tax liability? The total income tax liability will be this. Okay, so we have finally got 10 easy marks, 10 free marks. We have finally got 10 free marks. We have finally got 10 free marks. We have finally got 10 free marks. Did you understand? It's basic thing. Please write on the chat box if you understood. Please write on the chat box if you got this game. Okay, now just for you guys, I'm shifting directly to requirement number 3. Right now, requirement number 3 is easy for you. Just see the screen. Dear student, just look the screen. In the screen, you can see how much is the tax. See these two lines. See, I am highlighting it. How much is the tax on dividend income is 1350. Just think, if these dividends are kept by this SME, so next in the question it was written next year the income will be same. Next year SME's income will be same. So once again SME will have the same dividend income tax calculation. अगले साल भी SME की dividend income की tax calculation यही होगी. तो बेटा क्या होगा, इसको 2000 का तो एनआरबी मिलेगा और बाकी 4000 पे हायर रेट का डिविडेंड का टैक्स रेट लगेगा, दैट इज 33.75%. so this is going to be 1350. that means listen, if these dividends are kept by SME herself, then SME will have to pay 1350 tax. SME will have to pay 1350 tax. Okay, but now listen, hope you remember my iPad requirement. But if SME transfers these dividends, SME transfers these dividend to husband, then in that case zero tax. This zero tax liability will be there. So that means there will be a tax saving of straight away 1350. There will be a tax saving of straight away 1350. There will be a tax saving of straight away 1350. Okay, are you getting? So let me show you this requirement. This is the requirement. See, I have already written something. Let me enlarge. Okay, explain how both SME's income tax liabilities and ND's income tax liability for the tax year 23-24 would be effective if they were to transfer all the quoted shares currently held by. So see, I have written only one line answer right now. ND's currently has dividend income of 7,000 each year. If SME's shares were transferred to ND, then his net income would increase to 6 plus 7, right? 7,000 ND's existing dividend plus 6,000 from the wife. So 13,000. Now, let me write. Now, this 13,000 will be cancelled in front of personal allowance of 12570, leaving a taxable dividend income of 430, right? 13,000 we'll deduct 12570 personal allowance, so taxable income will be 430. But now this 430 will also be cancelled with NRB of dividends, which is 2000. So there will be zero tax liability in this case. Okay, so if she transfers, see, I have written in very simple language. Even I explained you this with pen. If she transfers, if SME transfers these shares to husband, then the family won't have to pay a single penny tax on this whole amount. Now let's calculate the existing tax. See, existing, if SME, sorry, keeps these dividends with her, then the income tax on these dividends would have been, it was 4,000 multiplied by 33.75%, okay, which is 1350. Okay, so by transferring these dividends, they can save tax of 1350. That's it. This requirement done. This requirement done. This requirement done. Did you guys understand? Did you guys understand this requirement? Yes, yes, I will explain the B requirement. Don't worry, don't worry. It's on me. It's on me. I'll explain the B requirement as well. This was C requirement. Okay. Now we are moving towards the requirement B, which is the general requirement C. Now see the requirement number B. Explain how a married couple can reduce the income tax liability for the tax year 22-23 by claiming the transferable amount of personal allowance, that is the marriage allowance. We'll have to tell and state why such a claim is not possible here. Okay. So married couples can transfer unused personal allowance fixed of 1260. So in this case, Andy has some unused personal allowance. Okay, first of all, you just told this that Andy has unused personal allowance, and if Andy transfers, then the fixed amount is 1260. Now the second point, listen to me. There is one guy who is the transferor and the other guys is the transferee. The person wait, the person receiving the personal allowance will reduce his or her, sorry, remember my words, his or her final income tax liability by 1260. Wait, by 1260 multiply by 20%, which is I think 252 if I'm not wrong, which is 252. Okay. Okay. Now what are the conditions? Can you tell me? Let me unbold it. Now in this question, Esma and Andy cannot transfer the personal allowance because they both are not basic rate tax payer. Esma is higher rate tax payer in this question. That's it. You did it. Okay. So first of all, you told that how much a personal allowance can be transferred, right? And the second thing you told that the person who is receiving the personal allowance will simply reduce her final income tax liability by 252. You know that. And the third thing, because 3 marks was there. Third thing you said that no, you cannot claim, sorry, they cannot claim this transfer of personal allowance relief in this question because for this relief to be claimed, both parties must be basic rate taxpayer. And in this question, ESMA is not basic rate taxpayer. Okay. Did you understand the requirement? Please write on the chat box. Did you understand the requirement? Please write on the chat box. So if you want to see the question, please let the first part, let me move the screen. Okay. So this is the first part, and then these are the parts. Okay. So that's it for today's class. Now I'm going to send you the slides after the class. Thank you and take care.